So the bear trap didn't quite play out like I thought. I thought that we would pull back a little bit further to 37.60, especially with negative tech earnings, with Amazon being down. But Apple did rip higher. Amazon is well off its lows. So there was a little bit of a bear trap. We just didn't quite get all the way, and we are ripping higher. Check my previous video if you want to see that. I do want to show you the market net flow for today and why I think we could actually go higher into next week. So first of all, calls and puts were pretty choppy today. Then calls premium started to pull away as puts stayed flat, and we saw a nice little move in the market. But right here in the afternoon, this is around 1 o'clock Eastern time, we saw a lot of put selling happen, and then calls just kind of started to take off. And what we're seeing now are new GEX levels that are higher up on SPY. Again, this is SPY stock price. The white line is the 1-minute chart of SPY. So now we are seeing GEX levels well above what we saw the other day. We have 392, 394, and 396. This is roughly going to translate into 39.25 on SPX and 39.50. So if we can get just above 390, which is about 3,900, where it looks like we're trying to close there today, I think we can push up into these levels before we find some resistance. So if we look at SPX, here's 3,900. If we can rally up another 50 points, that'll put us into this little congestion zone around 39.50. And then, I don't want to get too bullish here, but we'll probably see a pullback before then. But I mean, 4,000 is not that far away. Right now, market net flow options market is indicating that we want to go higher. You also have a green DEX level for delta exposure. Let me know what you think in the comments, and we'll see you next week.